You're looking at a weekly chart of the Nasdaq. Welcome to my weekly review. I just want to point out a couple of things. One, that I survived the great pullback of the summer of 2023, this little blip here on the screen. I really expected the markets to pull back a little more than that. But, the market's going to do what it wants to do. And we stepped on the gas here on May 10th. I wanted to point out this day. It doesn't look like much, but this is the day that it made the Nasdaq made a new high above the old 12,269, and it's just regular volume. Doesn't look like much of a day, but up more than 1%. Took out the old high, and it's just been pressing the gas ever since. It did pull back here to roughly the 21. You're gonna have to call that the 21, and then just ramped higher last week. So we're going to start off the second half of 2023 with the Nasdaq and a power trend, and I expect some rotation to go on, and you're just not going to be able to sit in the same old stocks. I'm sure there's going to be some volatility, but for now, this thing looks great. The IWM is another story. Remember, this has 17% component of those these small cap financials stocks that took a huge hit with Silicon Valley Bank, but it's starting to recover here. And you can see on the weekly here, this consolidation period here, and pattern rec is picking that up, is a cup pattern with the handle. So let's see if we can get above that area and see if this one could make new highs above the 199. Hopefully so. But anyway, I don't trade indexes. I trade stocks. It's nice to have the index. The headwinds, the tailwinds at your back when you're investing, for sure. And this is super micro. I'm just going to go through some of the stocks that I hold, and then just take a random walk today on the weekly. This is one that was doing well when the Nasdaq was floundering last year, and I bought it at 50, got shaken out, and then I bought it at 70, and I got shaken out. And then when I bought it at 90, this one has been with us since February 11th, $90. And I just said, I don't care if it goes below the 50 or whatever. I'm just going to hold this thing because of the fundamentals. I thought it was $100 stock masquerading at 50 when I got shaken out here. And then when I got shaken out, at 70, I said, I'm not going to get shaken out again. And it, it proved to be right. I mean, it could have sold off, I guess, but it does have tremendous growth numbers. This here, I checked into this, is they had a component shortage last quarter at their May earnings release. There was huge demand, component shortage, and that shortage has been rectified. And obviously, Wall Street's voted with their pocketbook. I had a debate with someone who said fundamentals don't matter anymore. It's just the chart and liquidity. Just liquidity matters. But fundamentals, brings the liquidity to the market. And this is the institutions telling you that the problems that SMCI had has been rectified, and now they're putting their money to work here in this stock. You got to look at the weekly, and you can see, all of 2022 is kind of going sideways, but it was making new highs and just kind of a stair stepper. You can see the stair stepper patterns here before it really took off here with the May earnings release. So yeah, up 15% last week, trading at 250. Got a bet with the individual that will make 300 before Tesla will. So anyway, SMCI, they're going to report in August, I guess, middle of August. I'm not sure if that's been announced yet. But anyway, SMCI, my number one stock, and doing quite well. Nvidia, everybody says it's overvalued, whatever. It's going to get more overvalued, it seems. This is a nice bullish wedge pattern here after it gapped up on earnings, pulled back to the 10. I got to go to the weekly because it had a 3 weeks tight pattern in here. And then currently has a 3 weeks tight pattern. If I zoom in, you can see that 3 weeks tight pattern. It doesn't matter, the daily range or the weekly range, how great it is. It's just the closings. And that has 3 closings that are tight. So we see what happened the last time it was 3 weeks tight. It went, bounced. I believe 390 was the buy point here, and ramped up to like 440 or something. Yeah, 439. and then pulled back to its 21, essentially has formed this bullish wedge pattern at the 3 weeks tight. So Nvidia, to me, you know, like, you want to know how to get into these stocks, you know, it's like, it's too expensive, I can't buy it here, but you know, it's giving you opportunities. And yeah, I know the numbers are red here. It doesn't have the fundamentals like SMCI does, but they just raised you know, a revenue guidance by 4 billion. So Wall Street's telling you that the growth is coming. And this is the liquidity right here. They're bringing it to the market. This is a large liquid mega cap tech stock, and it's my second largest holding. Anyway, let's move on to Tesla. We got to look at the weekly here with Tesla. This one had the big sell-off. You know, tech sold off all of last year. Everybody hated it. Went down to 100. Now everybody loves it. It just formed this consolidation here, and then broke out around 200. I want to say, yeah, we got in 207, something like that. And it's just been ramping ever since. It did pull back. I thought it was going to close this gap here, but it didn't. 235.23 did not close that gap. The low was 240. Yeah, so you know, gaps. It's an open gap. What can I say? I pulled back to the 21. The market's just too strong. This stock is just too strong. This is a large liquid. It's doing what? Average daily volume, 142 million shares. You know, at $261. That's a lot of money piling into Tesla on a daily basis. They're going to report their June deliveries tomorrow, I believe. So I'm looking forward to that. All indications are they're going to be pretty strong numbers. And you can see on the weekly, these big blue volume bars, you know, that's not Aunt Sally buying this stock. And so that's my third largest holding. The next one I want to get to is ELF. You know, you talk about, you know, fundamentals matter, and you got to be taking market share. And these guys have been delivering the goods here. If I go to the weekly, you can see the, you know, long list of quarter after quarter after quarter. They got triple digit growth here now, and 30, 49, 78% sales growth. This company is taking market share, and you can see it's been a long time since it's formed a base. This is July. It's been a year essentially, and just been ripping higher every now and then. It'll pull back to its you know, this is a 30-week line, I believe. No, let's see, 50 simple moving average, 10-week line. Comes back to the 10-week line, which is 10-week line and a 50 simple moving average. Pretty similar, not exactly the same, but that's your chance, you know. And it's just trading along its moving averages. But fundamentals matter. You can see the big blue volume bars here. Those institutions are providing the liquidity to drive this stock higher. So fundamentals do matter. And I definitely look for stocks with fundamentals or taking market share. You know, triple digit sales growth is nice too. And speaking of which, Celsius is another one of my top holdings. And this one had a buy point there around 122. It broke out to 138, then pulled back, give you a second chance. And stocks have been doing that, you know, breaking out, then pulling back, and then taking off again. And this one, you know, at 150, it's just pulled away from its base here. Breakout on the week of May 12th, okay, and then pull back this week, back to the 122, June 2nd, and the entire month of June just been ramping higher. And you can see the big blue volume bar. So people like this stock. They're obviously taking market share. And our friend Jonah Lupton at Lupton Capital, they would point out the Nielsen ratings, and Celsius is definitely taking market share. And the whole beverage industry is growing. So Celsius is definitely one that I like. Palo Alto Networks is another one. And we had this on our watch list many times because it took a little while for this one to break out. We had it here about 190. It undercut, you can see the 10, and then the 10-week line, and then ramped higher. But Palo Alto Networks is kind of gone now. So it broke out and it took off and said, see you later. And it's been about 20% gains, you know, so it's getting near that profit taking area. But definitely, you know, the king of cybersecurity. Again, this one has the fundamentals. You know, the 26, 25 sales growth, 80% or EPS growth. This thing's growing like a weed. I'm going to get to a couple other stocks in the group. If you can't own this one because it's extended, there are others in the group that are pretty strong in setting up. Chipotle, the retail, you hear the stories that retail's dead and we're going into a recession, but people are still buying these burritos here, 84% EPS growth, and accelerating sales growth. This one just broke out on Friday and had a great week. It was up $95 last week. I guess you could still, still buy it here. This one also had a 3 weeks tight. If you're inclined to do such things, you got the mouse, you can do whatever you want, but it is near a buy point. And that one will be on our watch list this week. Chipotle Mexican Grill looks good. Tastes good too, I guess. I don't know. I'm not a fan of eating out. Novo, this one's been hit recently because Lilly, a lot of news about Lilly. I don't want to get into it. I'm just going to say that Novo's problem was supply. There was too much demand, so they had to hoard their supply. And, this is 2 months ago, so I'm sure they've made every effort to increase their supply. But you can see that, this accelerating sales growth, 18, 24%, the accelerating earnings growth, 19, 38. And this is a big company. I mean, this market cap on this one is 364 billion. Not a small company. If I just go to the monthly, we just ended the month and it was up $1.37 last month, but it just grinds higher. This is one of those ones that you put in your retirement account. I never say, set it and forget it, because you always got to do your homework. But this one looks to have long lasting, the diabetes and the weight loss drug market is, hundreds of billions of dollars, and they're going to get their market share. And so another quality stock with, taking market share with quality earnings. And it's below its 50 here and kind of giving you, it's forming this little base. You can see the flat base there. So it's giving you a chance, it's not running away from you like some of the other ones. Speaking of which, Fix, this is one, HVAC. I love stocks like this, then just the, blue collar HVAC. Hey, you need it here. It's hot this summer here in the South. And you can see it's kind of a stair stepper stock here on the weekly, had a 3 weeks tight and just pulling away from its base. But another one with, 31, 33 sales growth, 48, 66 accelerating earnings growth, breaking out and moving higher here. If you missed it, we had the buy point there about 150. And if you missed it, maybe, you get lucky and it pulls back to its 21. So definitely one to watch. And if you, just look at the weekly, this is a weekly review and you can see it's just grinding higher. It's kind of a slow mover, kind of a, steady Eddie, but pays a really tiny yield, just like Nvidia, but quality stock, Comfort Systems USA. And I don't talk about it enough. Another one that's in the builder area, Builder First Source is obviously one of the quality stocks, but this is TGLS. This one, I believe, had earnings and sold off, undercut the 50, then did the DBO and rallied right back through. Made new highs last week, and just a really strong stock. It's got this, 60, 50 sales growth, triple digit earnings growth. It's not an expensive stock. And Technoglass is the name of the company. And, the construction has been really strong here in 2023, the home builders. Which, since I mentioned it, I'm going to go to Pulte. Pulte's another strong stock with the, double-digit sales and earnings growth. This one broke out of a base, ramped higher. You can see on the daily, and now it's just trending. It's just surfing its moving averages. And there you can see the base, kind of base, a deeper base, and then a little base with the handles really a base. And then it just has been ramping higher. But it has the quality, these big blue numbers, earnings and sales growth. That's bringing the liquidity to that home builder. Was another one that I want to look at here. Oh, we can't just have Nvidia as our only semiconductor play. So ACLS, this is a semiconductor equipment maker. I think that's the number 7 group year to date, and this is the leader in the group. Leading stocks and leading groups, and this one gave us a chance here. it ramped. Man, I had this one from 80 to 88, sold it. It came back again, bought it again, and then it really ramped. And then I sold it when it undercut the 50. But all it did was form a base, and it came down from 136 down to 109, did the Debo, put its foot in the ground and ramped from 10, was at 105 to like 162 in like a few weeks time, from what, May 5th to May 26th. Yeah, that's a nice run. So ACLS, this thing can move really fast. You can see it went up to 184, pulled back to the 21, found support, and was up like every day last week, just ramping higher, made a new high on Friday. So another strong stock from a really strong group. Another one that I just put on our leading stock list this week, I do not own. I do like it. The reason why, you could see the accelerating sales growth, 11, 13, 16, the accelerating earnings growth, 29, 38. This is not a real expensive stock, for a computer networking company, but you can see it had this little consolidation here and broke out recently. A stock that I like I said, I don't own it, but I think it gave you a chance here with the pullback, with the market pullback, the general market weakness. It pulled back to its 21, and then the last few sessions just ramped higher. All right, a couple other stocks I want to look at. I told you the cybersecurity, Palo Alto is king, but Fortinet's one that I like. And this one, you got to look at the weekly. It's a weekly review. It just broke above the old high. This thing had consolidated for like 18 months, and it consolidated. You can see it's, essentially a cup with a handle pattern here, and just broke out last week. Was up 5.5% last week. Looks real good to me. I shouldn't say anything, but I think it could still be actionable. I may or may not be buying that one, but that's definitely one that I like. And Zscaler is another one in the group that got to look at the weekly. It's a weekly review, and you can see a lot of these software names just sold off. It's the water slide at the water park, just or a ski slope, going straight down. But anyway, it stopped going lower, ramped higher. I believe that was that earnings jump, and now it's kind of flattened out. It pulled back with general market weakness a week ago. Then last week was up 2.5%. But you can see on the daily here, what I like about it is this 143 level, and if it gets above that, I like it. That coincides with the 21. So to me, that's actionable as well. DigitalOcean, another software name that looks, these things all look the same, but this stopped going lower, consolidated in a base. And you can see with the general market weakness pulled back to its moving average, and then last week was up 4%. Definitely one, again, with the, the accelerating, the earnings and the sales growth. You can see it's really ramping its earnings. But you could see the pattern here clear as day, and then the breakout, and then the pullback, came back to its pivot area. So, maybe this one will fail, or maybe it'll take off again. We'll see. But I like it. I like it to be long. Another one in the same type of area is Datadog. This one, you can see that, they all look the same. These software names, they just sold off hard for a year and a half. This one is forming a base here. Pattern Rex picking that up at 103, huh? I got it a little earlier, but that's okay. You can see it trading sideways, came down to its 21, trading kind of tight. So I like this one a lot. And the last one I'm going to show is Constellation. This is a spinoff from Exelon. It's an alternative energy play. You can see after its IPO, it really ramped hard, and now has formed this nice base. It does not have the fundamentals that I like, that I prefer, but I do like this chart, and I believe it's actionable. And anyway, thanks for watching the weekly review. Market's going great. Have a happy 4th of July holiday. The market has a half day on Monday, probably pretty quiet, closed Tuesday, and then we get back to business in earnest on Wednesday, and we never give up.